Hi, in this lesson, I'll teach about a relationship between a bank account and a bank statement and a bank reconciliation statement, which is more relevant to cash and cash equivalents. Okay, I would like to revise on the business entity rule that stipulates that there should be a big difference between the owner of the business and the business itself. So the financial affairs of the business should not be mixed with the financial affairs of the owner. So the owner have his own personal account, the bank account, and the business as well have its own business account. So the financial affairs must always be kept separately. Now, in terms of the sides, assets of the business, they increase on the debit side, and then the equity increase on the credit side. So these two, they reflect differently. An increase on the business's assets, it's on the debit side, and then an increase on owner's equity, it's on the credit side. All right. So bank account is an asset. Assets increase on the debit side and assets decrease on the credit side. Bank account is favorable on the debit side. By favorable, we mean the bank, the account, the balance of the bank has sufficient funds, or the balance is positive. That's the meaning of favorable. If they say your bank account is favorable, it means you have a positive balance. You have more funds, you have enough funds in your account. The bank account is unfavorable. The bank account is negative on the credit side. So if they say your balance, your bank account balance is unfavorable, it means you have a negative balance. So remember, when we do the cash receipt journal and the cash payments journal, the cash receipt journal are posted on the debit side of the bank account. Why on the debit side? Because bank account is an asset. Asset increase on the debit side. All assets increase on the debit side. So with receipts, remember, we are referring to cash that is coming in, the money that the business receives. So this money affects the bank account positively. But what about the payments? The payments, they affect the bank account negatively, hence why they are posted on the credit side of the bank account. What about bank statement? Bank statement is prepared by the bank, and then the bank, they treat you as an owner. So each and every individual or business, they treat them as equity, because remember, you are a client to the bank, so they treat you as an individual. So equity increase on the credit side. Once your balance, according to the bank statement, is favorable, it's gonna be credited, because why? Equity increase on the credit side. But any deductions, any withdrawals, the money that you withdraw, the bank charges, they affect your bank account negatively. Those transactions are debited on your bank account. So the bank statement is favorable on the credit side. When you have enough funds, your balance will be shown on the credit side. It means your balance is positive. But when your balance is negative, it will be shown on the debit side. Remember, equity increase on the credit side, equity decrease on the debit side. In conclusion, Bank account is favorable on the debit side. Bank account is unfavorable on the credit side. That's the business. Bank statement, think of an owner, think of equity that increase on the credit side, decrease on the debit side. Bank statement is favorable on the credit side. Bank statement is unfavorable on the debit side. Thank you very much.